Welcome back to the ET Money Show, and let's keep it going. There are a plethora of funds that are available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should be looking at to help you navigate through this maze? We have on board Mr. Aditya Shah, who is the Chief Investment Officer at JST Investment. And also don't forget to send us your portfolio queries on a WhatsApp number that we have been flashing on the screens, or you can also write to us. But Aditya, coming to you, very good evening and thank you so much for joining us today on ET Now.
Good evening, Srishti, and thanks for having me.
Well, yes, and a lot of viewers will be connecting us live. So let's get started. The first viewer is on the call with us. And his name is Sanket. A very good evening, Sanket. Aditya is with us. You can ask your question, your portfolio queries. What do you want to know?
Thank you, ET Now, for this opportunity. And good evening, Mr. Aditya. I'll be very specific. So my query is regarding, I had started with an ELSS, that is Axis fund, basically, with a direct growth plan. And it's not a long-term thing I had thought of. So it's like 5 to 7 years. So currently I have around 1.2 lakhs invested there. My target was like around next year, 2023. If I can reach up to a 3 lakh value of it, then I was willing to withdraw and invest it somewhere else. Right now, the current valuation I see is around 2.36, and I see that the star rating is dipping for that fund. What would you advise? Should I stay invested or withdraw it?
First of all, you need to check if the 3-year locking period has expired or not in the ELSS fund. The first point. The second point is from your NAV of about 2.3 lakhs to reach about 3 lakhs. You will need a very high return over the period of next 1.5 years, which seems very difficult. So point number one is you will not be able to reach your goal, unfortunately. If you are a long-term investor, then I will suggest that you stay invested in the stock. However, if you require money for the short term, which is your exact goal, I will say that redeem the fund and try to invest in a flexi cap fund. That will be better. Axis flexi cap fund has underperformed in the near term. However, no strategy works in the market all the time. It is a growth oriented strategy, and it has underperformed over the last 1.5 years. The short term, I would advise to exit out. If you're a long term investor, then try to hold on to this stock and do check whether the 3-year lock-in period has expired or not.
Okay, so switching to flexi cap fund is what is advisable, but Aditya, I must have missed, but any particular name of the fund that you have told our viewers, and also just want to know that why this Axis long-term equity fund has underperformed a bit.
Okay. First of all, I will address why Axis long-term equity has underperformed. In the last 1.5 year, value style of investing has caught up really fast, and the returns of the value style of investing are upwards of 25%, whereas growth style of investing has underperformed, and the returns are here 2 or 3% on the growth side of it. Axis having taken a bet on very high-class quality companies, where valuations are extremely expensive, you will find that it has underperformed. That's one part of it. The second part of it is that within the Axis AMC, there has been a lot of churn, and the regulator has fined the AMC for some irregular findings that have come up, and that has also affected the way the schemes are performing. So, two parts of it. However, no fund manager will outperform all the time. And in my view, if you have a long-term investment, it's a good time to add some in the Axis long-term equity fund. However, for the viewer, I have suggested some flexi cap funds. You can go towards a Canada Robeco flexi cap fund or a Paramparek flexi cap fund. They should be good enough for you. Try to have a flexi cap fund which will diversify your portfolio and give the fund manager the choice where do you want to invest, not leaving it on you, where you can have a bias for a large, small, or mid cap. So those are the two funds that you can invest in.
Okay, so Sanket, I guess that helps you answer your question.
Yes, very much. Thank you so much, Mr. Aditya.
Okay. Thank you so much for connecting. But let's move on to the next caller, and his name is Amit. A very good evening, Amit. What do you want to know?
Very good evening. This query is regarding the investment option that I'm looking at. So I'm carrying, let's say, I have 5 lakh rupees with me at this point in time, which I don't need it for next 10 years. So I was looking for an alternative option which I can use it, but which would be a more of a secured investment, of course, in the mutual fund segment. If you can suggest any of the fund or maybe an ETF for that matter.
Okay. So first of all, let me clear your doubts. There is nothing known as a secured investment in equities. If you're looking to invest in equities, equity returns can be volatile even if you invest through mutual funds. So that is the first thing that you keep in mind. No return is guaranteed. No return is no investment that you make is safe. Equity the second name of equity is volatility. So that's the first point that I got. Second point, since your time horizon is very long, about 10 years of time, I will suggest 3 funds to you. Parakari Flexi Cap Fund, DSP Quant Fund, and UTI Nifty Next 50. Split up your 10 lakh rupees into these 3 funds for an SIP of about 60,000, 20,000 goes every month, and enter only through an SIP route. Don't go into a lump sum mode. India is a long-term structural story. However, valuations are continuously extremely aggressive. And if you go into an SIP and if you catch a cyclical top, it will take a certain amount of time for you to make money. So split up the money into SIP into all of these 3 funds, and you will do exceptionally well over a period of 10 years.
But Aditya, I was quite sure that you will be touching upon the equity side of the mutual funds, but why not debt side of the mutual funds?
And since his time horizon is long, 10 years time, there can be a loss of purchasing power if he invests in that product. I thought that 10 years is a good amount of time to have a large capital bias and invest, keeping in mind that over the last 10 years, our markets have given a negative return for only 2 years. I don't think that he should be moving to a debt product. Of course, debt is a more secured product as compared to equity. That's why I suggested equity so that he can make at least 10-12%.
Okay, because a lot of viewers, when they read it from above, so that is the thing. But I guess Amit has a question to ask. Amit, go on.
Yeah, so the question is in the context of can we go for a lump sum amount, and what would be the debt alternative there? Because I understand the equity risk on the other side.
So
Okay.
if you're going into equity, don't go into a lump sum mode. Try to go into an SIP mode. On the debt side of it, you can try a HDFC liquid fund or a DSP banking and PSU debt fund. On the debt side of it, there is no need to do an SIP. Straight away go and invest in lump sum. However, the debt returns will be lower at about 6 or 7% as compared to an equity product. The choice is yours. I have given you both sides of the coin. You can invest as you like.
Okay, so Amit, I guess that helps you answer your question, because on both sides of it, the debt and the equity, what could be the likely returns expectation. But if you are going for equities, now is not the time that you go for lump sum. A staggered manner of investment in terms of SIP might give you some better returns. So you can look out to that. But let's move on to the next caller that we have. Mr. Shankar has joined us on call. A very good evening, Mr. Shankar. What's your question?
Yeah, good evening. Very good evening, ma'am. This is Shankar calling from Abu Dhabi, actually. So I would like to
Okay,
ask
then
about my
I'm sorry, that must not be a good evening for you, but please go on with your question.
Yeah. This Active Global Innovation Fund, which was a lump sum investment done in 1 year before, now this fund is a negative return of about 20%. So shall we hold or will exit?
Okay. Aditya, the line is not clear, so you want me to repeat that question?
No, I got the question. The investor is invested into the Axis Global Innovation Fund and it has underperformed, correct? So now what I want to say is that over the last 1.5 years, we have seen global markets undergoing severe corrections. We've seen 50% of US fall by 50%, and China is another one where there has been a deep correction. Not to mention the European market has also been corrected. So first of all, what you need to do is you need to first evaluate how much of your investment is going into the global fund. You should have your investments into global fund, but not more than 10% of your portfolio should be invested in the global fund. The first point. The second point is, of course, the funds have underperformed because there has been a global correction that has gone on, and uh, uh, because of that, your Axis Global Fund has also underperformed. I will suggest hold on to the fund since you are saying that you are long-term investor. For a bit of 3 to 5 years, you will make a lot of money on this fund. However, if you have the ability to add also, try to add a little bit of money here in a SIP consistent manner over a bit of next 6 to 12 months, you will do well. However, this is not because of your fund. It is because uh, entirely the world has corrected, barring India, and that's why there is a hit on your earnings.
Okay, I hope, Shankar, that helps you answer your question. But anything more you wish to ask from our expert?
Yes, sir. Yes, ma'am. Actually, this further adding fund cannot be possible in this fund, restricted from the bank. Yeah.
So yes, unfortunately, what has happened is RBI's limit of $7 billion has been reached, and you will not be able to invest more. So you need to hold on and see when the limit opens up. Then you can go ahead and investing. If you are interested in investing in the US markets, Kotak Nasdaq fund is one which is accepting inflows, or the Mirai Fang ETF, which is operated by Mirai, is also accepting inflows. It is a good time to invest in the US markets. However, the total investment must not be more than 10% of your portfolio.
Okay, Shankar, that helps you answer the question?
Yes, sir. Thank you. Thank you.
Okay. Thank you so much for joining with us. But let's move on to the next query. And Hari Nair Aditya has actually written to us. He has 42 lakhs of rupees in mutual funds, and he wants to have a corpus of rupees 10 crores in the next 15 years. How much monthly SIP should he allocate and start doing from the current years? What will be your advice?
So, ma'am, the investor needs to do about 70,000 rupees of SIP every month. And the investor needs to be very consistent and disciplined since his goal is very big. That's the first point. The second point is he can choose any of these 3 or 4 funds that I'm suggesting. Parak Flexi Cap Fund, DSP Quant Fund, UTI Nifty Next 50 Fund, and the Kotak Nasdaq Fund. These 4 funds equally split the SIP. Then you are good to go. The main point is be disciplined, be very disciplined in your investment, be very consistent in your investments, and then you are good to go.
Okay, moving on to the next query, Aditya. Ramit has written to us that he's investing in Motilal Oswal Flexi Cap Fund. For the past 6 years through the SIP route of rupees 30,000 on a monthly basis. His current corpus is 19 lakhs 87,000 of about, and he doesn't need this money amount for the next 10 years. Should he continue the SIP amount or move to some other fund? What will be your suggestion?
Well, my suggestion will be hold on to the fund, no problem as such. However, all your mutual fund investment must not be in one fund. I will suggest to add a index fund, a UTI Nifty Next 50 fund, and on top of it, also try to add an international exposure since the US markets are correcting and they look very attractive. A US fund in terms of Kotak Nasdaq fund will really work. So net, what you should be doing is continue with your investments in Motilal Flexi Cap Fund, and on top of it, try to build these 2 funds: a Parak Flexi Cap Fund, a UTI Nifty Next 50 Fund, and a Kotak Nasdaq Fund. So what really happens is you get an index fund exposure as well as you get a US market exposure. So broadly, you have all the exposures that you want, and then there's little chance that you will underperform the market. So these 3 funds you can add, equally split your SIP amongst all of these 3 funds, you're good to go.
Okay, moving on to the next query. Aditya Sharmila has written to us that she has 4 mutual fund SIPs going on, which she started 2 years back. Now, these the names are Nippon India Pharma Fund, Axis Blue Chip Fund, ICICI Technology Fund and Kotak Small Cap Fund. What will be your advice on changing her funds allocation as of now? Are these funds good for the next 5 to 10 years horizon as well? Because she also holds a few individual stocks and the few allocation in the bonds and the FDs as well. So looking at the portfolio of mutual funds, what is your liking is on this?
First of all, ma'am, if you have the ability to research, only then hold direct stocks. If you don't have the ability to research, just because the stock market is going up, do not invest in direct stocks. Mutual funds are a better route for you to have exposure where a fund manager is constantly checking where your investments are going. So the probability of permanent loss of capital will be less. That's the first point that you should, that the viewer should keep in mind. The second point is the viewer has got a pharma fund and a technology fund inside the portfolio. Do not invest in sectoral funds. Sectoral funds carry very high risk. We have seen the pharma route of 2022 and the technology route of 2022, where a lot of investors have lost a lot of money. They started investing as the technology sector started to grow up. So do not invest in sectoral fund. Always invest in diversified fund, where the fund manager will take a call where you need to invest. The second point. Third point is now you need to modify your portfolio. Try to include a Parak Flexi Cap fund or try to include a UTI Nifty Next 50 fund. You can hold on to your Kotak Small Cap fund. Equally split up your SIPs into these three funds. Try to have some US exposure as well. As I have been continuously saying, we should be good to go. SIP these funds for about 5 to 10 years, and you should have a good amount of wealth inside of it.
Okay, thank you so much, Aditya. With this, we'll let you go on that. Thank you once again for helping all our viewers curating their portfolio and advising them what's your liking like at this point in time. Okay, but with this, viewers, it's a wrap to this edition of the ET Money Show. Thank you so much for watching.